Hey, thanks, Sam, and thanks to all of you who have joined us today. This is a mind-boggling crime that we're going to talk about, the crime of tax refund fraud. And what we're going to do today is sketch out for you what this crime is, how it's committed, to kind of give you some background and some context, and then we'll move into a discussion of, so why do you care, other than as a citizen who is affected by the fraud losses that impact the federal government. We'll talk about your obligations under the Red Flag Identity Theft Program, under CIP, under the Bank Secrecy Act guidance from FinCEN, to look for the red flags that could indicate that this crime is taking place at your institution. I remember the first time I was preparing for a presentation on tax refund fraud. It was back in very early 2013, and I was horrified to find on the Internet virtual how-tos for committing the crime. You could go on and get step-by-step information about how to perpetrate tax refund fraud. I'm very happy to report to you now that it's much more difficult to ferret out that information. You can get the broad brush strokes, but the details aren't there the way they used to be, or at least they aren't on the regular part of the web. Perhaps they have gone to the dark web that the criminals hang out in. But the first time I was going to do a presentation, I was talking to a friend of mine who has a master's degree and a bachelor's degree in accounting. She's been a CPA for over 30 years, and now she's a bank examiner. And I was saying, this is huge. This is just absolutely huge, the crime of tax refund fraud. And she said, well, what does it involve? And I said, well, typically what the thieves do is steal identities. Then they file tax returns in the names of those individuals, or they can even steal the identity of a business, and they make a claim for a refund, and then they figure out a way to get a hold of the refund, either by having it deposited to a bank account that they control, probably in a fake name, or a reloadable prepaid card that they can control, or even by having it sent through the mail to an address where they're going to steal the mail. And my friend said, well, that seems really stupid to me, because if they're going to do that, they would be limited in amount to the refund that the actual person would be entitled to and the amount that the person has paid in. So naive. So off base. If only that were true, but it's not. And I'm going to explain in just a minute why that is not the case and why you have circumstances where one stupid thief didn't actually steal somebody else's identity. Instead, this 25-year-old Oregon woman filed a bogus return in her own name, claimed $3 million in income for the year, and got $2.1 million back as a refund that she had placed on a prepaid debit card. Wouldn't you think that alarm bells would just be going off all over the place? How did she get caught? She actually didn't get caught until she lost her debit card and went to the issuer and requested a replacement. So let's talk a little bit about a couple pieces of terminology. First, This crime has become so prevalent that they gave it a name, stolen identity tax refund fraud, or it's known by the acronym SIRF, and it is where someone has stolen personal identifying information belonging to another individual or entity, and they have used that to file a fraudulent tax refund claim with the IRS. And it's a numbers game. The more identities they can get, the easier it is to perpetrate the fraud. And you have known narcotics traffickers who have gotten into this crime because they say, you know, if we rob a bank or if we're out on the streets selling drugs, we have personal safety issues. If we walk into a bank, we could get killed by the police or the FBI or a security guard at the bank, or in some gun-toting states, perhaps even another customer. But tax refund fraud, we can commit whatever time of the day or night we please, sitting at our computer in our jammies. It's clean, it doesn't pose a risk of violence, and it is extremely lucrative. How bad is this? It's bad. In 2013, they have appointed a special office within the Treasury Inspector General for Tax Administration, TIGTA. They said that for the 2011 tax year, which was the one for which they had the most complete statistics, they believed that the IRS had issued $3.6 billion in potentially bogus refunds. And so there was a big push at the first of 2014 by the Federal Trade Commission and others telling people, hey, file your tax returns early, because that is one way to protect yourself against these tax refund thieves. If you've already filed your return, they can't do so. If they've already filed a return in your name with your Social Security number, then you may be facing up to a year to get it straightened out with the IRS. So we're talking today about SIRF, and one subcategory of SIRF is necrolarceny, and that occurs where the identity of a deceased individual is stolen and a tax return is filed in that person's name. When you see interviews with these fraudsters who have engaged in necrolarceny, they'll often say that they felt that it was a victimless crime because the individual whose name and Social Security number they were using is dead, and so that person wasn't hurt, and they kind of overlook the collateral damage that occurs to the loved ones and estate of the person who have to unravel and deal with this, who have to deal with all kinds of claims coming to them from the IRS and so forth. So the IRS tells us, look, we can tell you how many fraudulent returns we've caught, but we can't tell you how many we haven't caught. The only way we know about those is when the legitimate taxpayer comes forward and says, hey, I tried to file my return with TurboTax last night, and I got an error message telling me that a return had already been filed using this Social Security number. So they can tell you how many people have come forward and made those claims. And from 2008 to 2012, there were more than 550 taxpayers who approached IRS and proved to their satisfaction that their identities had been stolen and someone else had claimed false refunds in their name. So this is a big deal within the Department of Justice and the IRS right now. They're trying to to combat this tax fraud, and they're doing it through multiple approaches. One of the things they're doing is, as the title of the slide says, creating